Hey guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, I want to go over 6 stocks that I think are extremely strong buys as we are heading out of February and into March. These 6 stocks come from a list of about 100 stocks that I have reviewed for the alert date of March 1st, 2023. These stocks are coming to an apex where support and resistance are going to meet, and the stock is either going to break through that resistance or it's going to fall through that support. And what I look for is characteristics to support a narrative as to why the stock would break through the resistance. These 6 stocks, I believe, are considered strong buys based off of these characteristics alone. They are little to no debt, low float stocks, stocks with high gross margins, stocks with positive sales over the past 5 years, positive EPS over the past 5 years, positive guidance for EPS this year and next year, institutions buying, insiders buying, and I think a couple others. But we're going to jump into these 6 and we're going to go over what we like about the stock and where we could maybe see it going. Let's jump into our first one. So the first stock we're going to look at is ticker symbol CC. This is the Chemours Company. They are a specialty chemicals company. And if we're looking at this daily chart here, we can see this is in an ascending triangle pattern. This is a bearish pattern. However, we're going to want to review the financial data points to see if it is a false pattern. So what we're looking at is a stock that is $35, and you guys can still see my screen. They make 7 billion in sales. They have $908 million in income. They offer a 2.85% dividend, which is really good. Their quick ratio is 1.1, meaning they have sufficient cash. Their debt is 2.75 and their long-term debt is 2.73. That shows me that they have debt, but they're paying it off. They have earnings per share this year of 173.8%, earnings per share next year of 35%. They have EPS of the past 5 years at 148% and sales over the past 5 years at a positive 3.3%. Gross margins are at 25.7%. They are profitable. Institutions have been buying. So what we want to do now is let's determine what the fair value of this company could be. And if you're not familiar with my calculation techniques, I do have several videos on how you can do that. So just going 7 billion, 30 million, and we're going to divide that by our shares float of 149,300,000. That gives us a conservative price target of $47. The current price is $35, so I see an automatic wedge where there is a gap of at least $12 to be had, and we're not even counting the income onto that or the market cap. So that looks good. This right here looks undervalued. Let's look at institutional ownership. So FinViz does have older data, but that can help us for future forecasting. So since FinViz has older data, we can see the newer forms being reported to the SEC to see if companies are buying or selling a company or buying or selling a stock. So we're going to go to fintel.io and we're going to look at CC. And again, FinViz is showing that institutions own 76%. And Fintel is showing that they actually own 81.9%. That's a nice little move right there. Institutions have added 5% since the last reporting period. So that is great there. This stock looks wonderful. And if we look at the chart here, we can see that it's going to hit its head right here at 38. But we also want to just kind of pay attention to this support here. So we have that to look for. And again, we're just coming down here. Their revenue is growing very nicely. Their operating income is increasing. Their net income is increasing. Their balance sheet, they have $1.4 billion in cash. Total assets 7.5 billion, liabilities 6.4 billion, with total debt at 3.7 billion. So their total debt could be paid off in 1 year if they were really aggressive, but they're being strategic with their debt. So also this type of environment is not good for debt with rates going up. I'm not sure what their contracts are for how long their rates are locked, but basically I like this company a lot. It is one of the stocks that I am going to be watching very closely, and I may have already taken a position. If you do want to keep up to date on my positions, I do post everything in my communities tab. Feel free to check in there to see what's going on. So this company looks great. I have a conservative price target of $47. If we add in that extra 908 million in income, that basically translates to another $9, so around $56. I'm liking this company, and we can also see right here, huge addition right here, and then we also have some steady buying going on here. So this company is looking really good. I think we're ready to move on to our next one. The next company we are looking at is CleanSpark, ticker symbol CLSK. This company is getting more prime for a wonderful setup. We can see they make 131 million in sales, but they lose 40 million. They currently have very little debt. They're also paying that debt off. They have a quick ratio of 1.5, meaning they do have adequate cash. They do have EPS for the past 5 years at 25% and sales over the past 5 years at 211%. They also have insiders buying and institutions buying. Their gross margins are 68%. Their profit margin is not even negative by 1%. So I'm thinking in 2023, this company is going to be profitable, and it would be great to get in on the way up. And looking at this chart, I think we're near a bottom. So I'm very excited about this company. Scrolling down a little bit, going back, 40 million shares float, meaning it is a lower float and could become pretty volatile. Institutions own 30% as of FinViz showing, or I'm sorry, that didn't even make sense. CLSK. So the old FinViz data has 30% ownership, but the new data is represented at 35%. So again, another 5% increase in institutional ownership. That only boosts the market cap, adding more value to the company. Let's go look at their financials to show you why I'm also excited about this company. So their total revenue started at 39 million in 2021. 2022 was 131 million, and the trailing 12 months is at 140.08 million. So revenue is increasing, profit is increasing. Net income is not looking good at the moment, but everything is looking really good. Their total assets are at 452 million and total liabilities at 48 million. That is almost a 10-to-1 ratio, which is insane. They have $21.6 million in debt, which is about less than a quarter than what they make every year. So very manageable. I think they are getting closer to profitability. I think this has bottomed. We have seen institutions purchasing. And then the insider buying was only this purchase here by the CFO at $1.78. So he is up about 100% on his purchase, which is good for him. And again, CleanSpark is software that engages in the mining of Bitcoin. So if you're not a crypto person, you might want to be skeptical about this one. But let's go ahead and move on to our chart for CleanSpark. So it's a very, not a very long and historical chart like I like. I normally like the 10-year plus stocks or companies that have been around for 10 plus years. This has only been around for less than 7. So yeah, just want to call that out. But with the data that we do have, we have this downward channel. And then we also have this its area of support and resistance, and we're currently under the normal level of support and resistance over the whole period of the stock lifespan. And we also have this resistance here. The price of the stock has never broken past this resistance. So yeah, this one, I'm excited about this one. We'll see how earnings are coming up. They do release earnings on May 10th. So we'll see how that goes. But yeah, let's move on to the next one. The next company we're looking at is Core Molding Technologies, ticker symbol CMT. I apologize, you guys cannot see it. Here's the full chart. So currently this stock is $16.45. But is it worth $16.45? Let's do some quick math here. So the company brings in $364 million, 364.1, and they have 7.5 million shares available. That means this stock should be around $48 conservatively if they don't have any debt. Looking at their debt down here, they do have some debt and they are paying it off substantially. They were at 0.26, now they're at 0.21. So they are addressing that debt. They have had positive sales over the last 5 years. However, their EPS over the last 5 years is negative 10%, which is okay. Their gross margins are 13%, which are pretty low, but I think after we look at the stock a little more, you might see why I really like it. Insiders have been buying, institutions have been buying. It's a very low float stock. Looks really good. So I have a $48 price target on this stock conservatively. Let's look at the books down here. So the total revenue is growing very nicely. Operating income is growing. Net income is growing. Well, in 2020, it was nice. It declined in 2021, and then it grew in 2022. They have 6.15 million in cash. Total assets is 186 million. Total liabilities 86.6 million, with total debt at 29.62 million. With the total debt at 29.62 million, they make 10 times that, so I don't think that their debt is a burden to them. Finviz has institutional ownership at 46%. If we look at updated data from the SEC filings, we can see that it's actually around 61.53. 61.53. That's a 15% increase. So that's a little crazy. Let's look at Thinkorswim really quick. CMT. Okay. This is what I call a power move. Right here, look at the respect. Bounces off the support. Look at this monster candle. Last month, there was 804,000 in volume. This month, there's 551,000. How insane is that? We still have another rest of the month to go. We're definitely going to exceed 1 million volume, 1 million shares in volume trading. I do see this continuing to go higher. I think it's going to hit its head on the 24 line up here eventually. So I'm very excited about this company. I am definitely going to be holding a position by the time this video comes out. Again, this video is kind of stemming off of one of my longer ones, just saving a bunch of time by just looking at the really good stocks. So we just finished the first three. Now let's finish the last three. All right, the next one we're looking at is Computer Task Group, ticker symbol CTG. You guys can see my screen. All right, is it really worth the $7.40 that it's trading at? Let's bust out the calculator and find out. So the company makes 359.6 million, and they have 13.9 million shares outstanding. Whoops. 359.6 divided by 13.94. So a fair value of around $25, which means this is undervalued. They have no debt. Earnings per share in the past 5 years is at 20%. And sales have been positive 3%. Earnings per share this year, 73.2%, and next year, 21.7%. Again, the EPS next year is referencing 2023 because FinViz has older data, and next year means this year, actually. So we do have a little bit of institutional selling based off of this. Gross margin at 23%. They are profitable, and yeah, they have a low float of 13.9 million shares available. That is crazy. Let's see, CTG. So FinViz has them at 53.1% institutional ownership, but they're at 62% institutional ownership. What a positive shift. That's huge. So that is great. Just going down, looking at their income statement, their revenue is a little bit lacking compared to the last year and the year before that. Their operating income is increasing, which is good, becoming more efficient. Their net income is getting more positive. Their balance sheet, they're growing their cash position. I wonder what they're using that cash for. Maybe they're going to buy back some stock. Maybe they want to buy another company. Maybe I'm talking too fast. Maybe you should subscribe and like this channel. Total assets is 188 million and total liabilities 93 million. So that's about a 2-to-1 ratio there. Assets dwarf liabilities 2-to-1. Total long-term debt, total debt 0. Duh. They do have other liabilities of 27 million. I don't know if that is, and it's decreasing from last year, so maybe it is some type of property depreciating, or maybe they spent some money on hiring a marketing team. I don't know. I'm just throwing it out there. So again, this company looks really good. And if we look at Thinkorswim, let's go to CTG. I had said that it calculated to be around $25, and if we see a pattern here of this breaking out, we do have a $25, I think, up here. So what I think could happen is we could see you can see my screen, right? We could see a come up here, a little breakout, and then a throwback, and then a move up to, I think, what could be 25. That's very long term. But, given the data that we do have, this company is very attractive, and I do anticipate to get a position here soon. Just looking at volume strength, last month there was 457,000 shares traded. This month there's 213. Based on that information, it will be pretty close on, the amount of shares traded this month compared to last month. So again, I like this company. I am looking to potentially buy it. Let's move on to the next one. The next company we are looking at is Danaos Corporation, ticker symbol DAC. This is a marine shipping company based out of Greece. Let's take a peek at their financial data points below. The stock is currently trading at $59. Let's see if it is overvalued or undervalued. Well, since I'm reviewing it, we all know it's undervalued. Let's do some quick math here. We know they bring in 955 million, 0.9, and they have 10 million shares float, 10.82 to be exact. That's around an $88 price target. With a little bit of debt, they are paying their debt off. That is great. They have positive earnings. Well, they did have positive earnings. They have some decrease this year. Over the past 5 years, they've had 25% EPS growth, which is great, and positive 6.7% sales over the last 5 years as well. Both great. Insiders are buying. Institutions look like they're selling, but we're going to take a peek. Gross margins, 80%. That is wonderful. They're very profitable. Low float, 10 million shares float. They do offer a high dividend, which is wonderful. In fact, when I was actually recording this video, I had to pull an executive move and I had to buy this stock immediately in my dividend portfolio. So that was just a fun time there. That's in my recording I did not too long ago. It was like a 2-hour long video. Okay, so let's just go down and look at this other data. So revenue is just off the charts. You guys can see it. They went from 689 mil to now at 955. Operating income is just exploding. Their net income is quite a bit down compared to last year. Not too bad. Their balance sheet, they have 129 million in cash. Wonderful. They have 3.6 billion dollars in assets and 1.5 billion dollars in liabilities. Assets dwarf liabilities 2 to 1. That is good. Their total debt is 1.3 billion. And going to the top, 1.3 billion exceeds what they bring in every year. So that is something to keep a watch out for, but they are paying off their debts. So that is all good news. The FinViz is showing that institutions own 21% of the company. Let's double check up here. FinTel is showing us that it's more closer to 63%. How insane is that? That is why I had to make an executive move. That is crazy. And let's just take a little quick peek at the chart. So we see a huge looking cup. We see a maybe handle here. I also bought this because we do have we do have support here that could bounce off. Just totally depends. But check this out. Last month trading volume was 2.5 million. This month 2.6. And we still have another half month to go. So we're seeing extreme strength in this company. This is probably the best time to buy the stock in the last year. If we were super smart and on top of our game, we would have bought it at $2 and whatever cents. So, yeah. But this is a screaming buy for me for next week. If you're watching this video, I probably already own this. No, I do 100% own this stock by the time you're watching this video. In my M1 portfolio, I haven't decided if this is going to be on my Robinhood challenge yet, but here it is. And let's move on to our last stock. All right, guys, the last stock we have is Hudson Global Inc. They are a staffing agency, ticker symbol HSON. The stock is currently listed at $26.30. Let's see if it is worth that. Okay, so the company brings in $201 million a year, 201.6 to be exact, and there's 2.55 million shares available, meaning this stock should be around $100, 79 bucks. That's grossly undervalued. They have no debt, no long-term debt. Earnings over the past 5 years have been at 19%. However, sales are at negative 16%. Insiders are buying. Institutions have done a little bit of selling, but again, this data is old. Gross margins at 49%, and they are profitable. That is beautiful. I mean, this all looks good. Let's go down and check out the revenues and everything. Revenue exploded from 169 mil to 201. Nice. Operating income doubled. Net income almost tripled. It's crazy. Cash, they have 21 million in cash. They have 61 million in assets and 21 million in liabilities, 22. About almost a 3 to 1 assets dwarfing liabilities there, which is great. Let's take a peek at these insider sells. So the CEO is literally just dollar cost averaging. Good lord. Every day for the last 3 months. Okay. Um, that's cool. Okay. So, FinViz is showing institutions own 55%. Let's look at updated data. Let's see what they really own. 73%. 73%. And the older data was 55. That is nuts. Let's look at a chart. Okay, in terms of the chart, pretty weak volume. So last month there was 261,000 in volume. This month there is 97,000 in volume. They do have earnings coming up March 10th. So, I mean, Historically, that is great. This because if we look historically, here's our high of 59, our low of 6. We're near 26. I mean, the lower we could get, the lowest we could get, it's maybe coming back down here, touching the 18. But I mean, nice bounce here, and then moving towards this channel. This company looks good on paper. However, technically, technical analysisly speaking, we might want to wait for a little pullback, but this one is on my radar as high alert because I mean it's totally worth it, right? 200 mil in revenue, 2.5 million shares float. Huge. That is huge. They had a gap down. This was November 10th. Right here. Okay, so they reported Q3 missing expectations. We could just take a peek. Why not? Let's just take a peek together. How bad? Lag estimates. Okay, so they missed earnings. Um, I mean, they're up year over year. Okay, so this is just Zach stuff. I mean, this seems like a decent company to slowly add into. I mean, there's been some interest. It kind of looks like a bear flag to me, honestly, right here. Let's look at the weekly. Yeah, the weekly looks more like a bear flag. So I think we could go down to the 19s. Very, very possible. Let's look here. Yeah. We'll see what happens. I mean, they didn't have a horrible quarter, but I mean, guidance. It is staffing, people are being laid off, which you would think might be more revenue for these staffing companies because they're placing more people in newer positions. So, this is the one I'm not really sure about, but it's on my list for high watch. So, yeah. If you guys made it this far, please subscribe and like this video. It would really help my channel out. And I hope these 6 stocks are something you're interested in and you're watching this video to see if we do align in what we believe. So, yeah, with that, I hope you guys have a great day or night, and I'll talk to you soon. Bye.